As a company, we can start incorporating HR analytics. We can track absenteeism, employee performance, employee selection, diversity, equity, and inclusion. And there's several analytic tools we can use that we will further discuss. Okay, let's start with absenteeism. Tracking absenteeism metrics using both absentee rates and absentee cost analytics is essential for companies to maintain productivity and manage operational costs. The absentee rate provides insights into how often employees are absent, helping identify patterns or potential underlying issues such as low engagement or health related concerns. Absentee cost analytics, on the other hand, quantifies the financial impact of these absences, including lost productivity and additional expenses like hiring temporary staff. Together, these metrics offer a clear picture of how absenteeism affects the company's bottom line and allows management to implement targeted solutions such as wellness programs or flexible work options to reduce absenteeism and improve overall performance. So, if we're looking at absenteeism rates, how is it calculated? So, it measures how often employees are absent over a certain period of time. For our sample, we're going to go with just 1 month, which is about 20 days. So, as you can see, it's the total number of work days divided by the number of days absence times 100. So, total days worked was 20. Total working days scheduled, 20 days, divided by 2 for employee A times 100 puts them at 10% or 0.10. For employee B, they worked they were absent, 3 days, scheduled to work 20, which put their employee absenteeism rate at 15%. Absenteeism cost is the direct financial impact of absenteeism on productivity. This is calculated by multiplying the lost productivity per day, number of days absent, and the number of employees. For example, if the average employee produces $280 worth of output per day and 10 employees are each absent for 5 days, the total cost of the absenteeism would be $10,000. Since here we are assuming that the absenteeism patterns for these 2 employees represent the entire workforce of 50 employees, we multiply the absenteeism cost by the factor to account for the full workforce. So, for example, our cost of absenteeism sample for employee A and B equals 1440. We take 50 and divide it by 2, and we take that 25 and multiply it times 1440, and total cost, absenteeism cost for our company is $36,000. This number represents the total potential financial impact of absenteeism on the company in terms of lost productivity and wages paid for days employees are absent. Rapid Model offers an approach to tracking employee performance that goes beyond just task completion. By using Crepit, managers can make better decisions about who to promote, where to invest training, and even how to improve company culture overall. It ensures that managers don't miss out on important aspects of an employee's contribution that go beyond basic productivity, focusing on long-term success rather than just short-term results. Moving on to Crepit Analytics, we look at 3 main factors: performance rating, dollar value of activity performance. To get to our dollar value of activity performance, we multiply the performance rating using employee A as an example of 4.8 times 60,000. That will give us $288,000 for the dollar value of activity performance. But what do they mean? Let's break it down here. So performance, this is shown by each employee's performance rating for their different activities, like developing software, system testing, etc. A higher rating means the employee is performing well in that area. Dollar value of activity. This shows how much each activity, like software development and system testing, is worth to the company in dollar terms. For example, software development might be worth $60,000 and client support might be worth $45,000. Dollar value of performance. This combines the performance rating and dollar value of the activity. So if an employee performs well in a highly valuable activity, their performance is worth a lot to the company in dollar terms. We multiply their rating by the value of the activity to get this number. So if we want to compare employee A and employee B, total dollar value of employee performance, we can see that employee A is ranking a little bit higher. Their total performance is 892,000 compared to employee B, which is 838,500. And in short, by applying the CREPIT model, the company can take a proactive approach to employee development, promoting a more engaged, diverse, and high-performing workforce, ultimately leading to better business outcomes. Employee selection. So we use the Brogdon-Cronbach-Lesser staffing utility model as a valuable tool for our company to enhance our employee selection process through HR analytics. This model allows organizations to quantify the economic value of hiring decisions by linking employee performance to measurable outcomes such as productivity and financial returns. By calculating the utility of different selection models, such as interviews, assessments, or simulations, the model helps companies identify which approaches yield the highest return on investment. The Brogdon-Cronbach-Lesser utility model is particularly helpful for improving employee selection because it enables data-driven decisions. Rather than relying on intuition or subjective factors, HR teams can assess the financial impact of selecting high-performing candidates, reducing turnover, and minimizing hiring mistakes. Ultimately, this leads to more effective hiring practices, better employee fit, and increased overall organization performance. So utilizing the equation below, we have tenure, which equals 3 years. Then that is multiplied by the number of employees. And for our example sample size, we're going to use 50 employees. We have a moderately tested validity of 0.5. Our standard deviation is 20,000. Our z-score equals about 1.0. And cost equals about $2,000 per employee. So if we multiply all those factors together, plus do a little subtracting here and there, we will get our total utility dollar at 1.4 USD. This utility model shows that using a selective process with a moderate validity score of 0.5, the company can expect to save or gain 1.4 million over 3 years for these 50 employees. This comes from hiring more productive employees who perform above average, contributing significantly to the company's output. Now, the last metric we want to start tracking is our diversity, equity, and inclusion. This involves gathering, analyzing, and visualizing data on a company's workforce to assess representation and pay equality across various groups. DEI tracking can help organizations identify gaps and inequities in hiring, compensation, and career progression, particularly in minorities and women. By using analytics for DEI, we can start by tracking how many minorities and women are hired each year. The company can set diversity goals and track progress over time. If hiring trends indicate that fewer minorities or women are being hired, the company can revise its recruitment strategies. Pay inequities. Tracking salary data across data. By tracking diversity, equity, and inclusion data, we can track our hiring practices. By seeing how many minorities and women are hired each year, the company can set diversity goals and track progress over time. If hiring trends indicate that fewer minorities or women are being hired, the company can revise its recruitment strategies. Pay inequities. Tracking the salary data across different demographic groups helps the company identify pay gaps. In this case, the company can take corrective action, such as conducting pay audits and adjusting salaries as necessary. Improving DEI. This data-driven approach provides actionable insights for HR, leadership to create policies that foster a more inclusive environment and retain diverse talent and promote an equity in composition and career progression. Please see the data below as you can see what we want to hire versus where we are right now, and look at our pay inequalities amongst men, women, and minorities. To summarize what we discussed, so absentee rates and costs, the CREPIT model, DEI tracking, and the Brogdon-Cronbach-Lesser model will help us achieve our goals as a company.